Hello everyone, this is my name is Ilfat and it's my due diligence on Shopify financial statements. I'm not reviewing Shopify products, I'm reviewing its financial statements. In my opinion, management of the company has problems with integrity of financial reporting, and I don't believe these figures, and I believe that they are manipulated in order to increase the stock price. So you can add your comments under the video. I don't know if anyone will watch it. I hope someone will, to have a minority report on what's really happening, because almost every single opinion in the internet is bullish about the stock. So we will use official resource of Shopify, its report for the 2020 year. We are going to revenue figure 103 page. It's 3 billion for the year, and it's twice as much as the previous year, almost twice as much. I don't believe the 2 billion merchant solutions revenue, and there are several reasons behind that. The first reason is right above the financial statements in audit matters. Please read them carefully yourself. The main point is here that there was a significant judgment applied by the management and high degree of auditor judgment. It's with respect to revenue recognition principle versus agent, and I believe that Shopify should recognize its revenue from certain merchant solutions as Shopify payments, for example, as an agent, rather than as principal as it is doing now. If the different principle is applied, the revenue will be much lower. Why I refer to Shopify payments? Because if you remember, the 3 billion is the figure, and Shopify. And if we see later, how we see later in the report, like if you do the math correctly, like you calculate the amount of Shopify payments based on this figure, it will be $1.5 billion this year. It's a very significant amount. It's half of the revenue, and it's coming from Shopify payments. The second reason is that I have reviewed the contracts on website of SEC, and I have reviewed the terms of agreement between Stripe and Shopify on process of the payments, and in my opinion, you can find the agreement here. On SEC official website. Here are the main terms that are important to me. Please read them carefully, but according to my observation, the whole responsibility and control over payments is on Stripe. Shopify, later we will see that Shopify simply doesn't have any assets to process payments, and Stripe can render services for transactions without involvement of Shopify. For example, if merchants purchase basic package, however, Shopify cannot render services without involvement of Stripe. Sorry, I will return to my notes. Second of all, Wix, it's a competitor of Shopify, has the same number of merchants as, sorry for the sounds, my cat is playing with the cable. Second reason is Wix, a competitor of Shopify, has similar number of merchants and live websites, but has much lower revenue. and it doesn't have any critical matters with respect to revenue recognition principle. With respect of revenue recognition principle, here we see the week's financial statements. It's also audited by a Big Four company. Here it's business solutions that we can compare to merchant solutions, and you see like 10 times less revenue. The third reason behind that is again comparing to weeks, Shopify has much lower deferred revenue figure. Balance sheet. Here's deferred revenue Shopify. It's $21 million, and this deferred revenue balance of weeks is almost $400 million. Let me check how much time do I have to explain further. What is next? The next reason why I don't believe revenue is in addition to that I have told before, the billing cycle of Shopify is minimum 30 days. It can be extended, but according to the deferred revenue figure and revenue figure, fees are paid every 2 weeks. Maybe the billing date is not the end of the month. We don't know that, it's not stated anywhere. But again, it's very unlikely because the absolute number of deferred revenue is lower of Shopify than weeks. And the fourth observation is not based on figures, it's based on the assumption that just to make so much amount of profit, so much revenue, Shopify Shopify merchants have to make sales in the amount of $200 billion. It's half of the all imports from China to United States in a year. It's very big figure, and it's very unlikely for me. Another point that I would like to add is that sales and marketing costs of Shopify are really high. Since I don't believe revenue figure, I will refer to gross profit. And sorry, I have still, here's the financial statements we are looking at, and as you see, sales and marketing are $600 million. So that means that Shopify receives only $2.50 rounded, very good in the favor of Shopify, for every dollar spent on sales and marketing. And this is not a really good indicator of the decent company, of companies whose business practices are good. Mainly you see it in pyramids, in Ponzi schemes, in scam companies. Another moment I would like to take your attention to is the research and development figure. As we see, again, hundreds of millions of dollars are spent on research and development, and we see no increase in any long-term asset. Here are our long-term assets. They are only decreasing due to depreciation and amortization. Here are the intangibles. They have decreased. Property, plant and equipment decreased. There is nothing really coming out of this research and development expenses. And I don't know why it's happening, but I think there is some problem in United States generally accepted accounting principles that allow companies to transfer cost of sales to research and development expenses. We have seen the recent case with Plug Power, whose financial statements will be restated for the last 3 years. And I think this missing in accounting principles is abused by many companies now. So I believe that these research and development expenses are actually sitting in cost of revenues, thus decreasing the operating gross profit even lower than it is. Again, in my opinion, after all the manipulations with classification of expenses and classification of revenue recognition principle, we still see very low income from operations. So $90 million for a company which claims has 3 billion sales, and that's valued at, I think now it's $150 billion. In my opinion, in order to show a better figure, Shopify management manipulated their financial statements and created profit from thin air on unrealized gains on equity and other investments. Wait, I will check that I'm still recording. Yes, I'm still recording. Let me see the page in my notes. Так. Page 120. Investments. As you see, in July they have received an investment in a firm. In July 20, they have valued it low, then they have revalued it in September and have recognized and the new valuation was showing the figure of 158 million, and the difference was recognized in a statement of profit and loss. It's very fishy for me that the revaluation is done in the same quarter, and that like that such a big. I will just remind you that operating profit is $90 million, and this is bigger than that. What else do I have to say? Again, it's an old figure. Now the price to earning ratio is 450, but if we exclude this unusual item from price to earning ratio, this amount will be above 900, and you can see on many websites that the trailing price to earning ratio is above 1000. It's because those trailing ratio excludes those unusual items. That's correct in my opinion. So this is a good indicator that the company is really trying to show that it's performing better than it actually does. My next concern is about a cash figure. I don't believe it. So how you cannot believe cash? Well, we have seen several examples with Wirecard, for example, where the cash became missing after some time. Here we see almost 2,700,000,000 cash, and but later, if you read the financial statements carefully, you will see that almost all the cash is in market funds and repurchase agreements and other securities, and corporate bonds and commercial papers are constituting half of them. What does it mean? That during the audit, as a former auditor, I can tell you that if you confirm cash from the balance in the bank, you just send the confirmation request to the bank. If you audit cash equivalents, you examine these documents physically, and those documents can be forged, they can be pledged, they can be borrowed, you can do anything in them. There is no real there are few ways to obtain very hard evidence on on that this cash actually exists. It belongs to the company, and I don't believe that most of the marketable securities belong to the company. Returning to cash figure, we don't see in financial statements any restricted cash. You see, there is no restricted cash. However, in this agreement between Stripe and Shopify, there is this paragraph that requires Shopify to have a minimal reserve on the Stripe. This should be the restricted cash, and we don't see it in the financial statements. That's a red flag for me. That means that there's why would somebody hide the restricted cash? In my opinion, for only one reason: if the restricted cash amount is high, and it's actually it's acting as a collateral for receivables from Shopify by Stripe and payables of Shopify. So I think Shopify payments accounts payable are also understated in the amount of the probably, I will give the number, from $3 to $4 billion. I mean, this cash figure is not certain that we see in financial statements. Again, it's my opinion. I'm not a financial advisor. It's almost the end of the video, and I'm relaxed. I'm here to express an opinion. I'm not here to give financial advice, but I think it's always important to hear some minority reports. I'm a fan of science fiction. That's why I'm referring to this movie with Tom Cruise. And what do we have next? Dropshipping is not relevant at the moment. Let's go to public offering. Like again, it's just a note. We are going to public offering. We go to public offerings, and I think in order to conceal fraud that Shopify is committing, it constantly injects cash into it. So by doing public offering, we see that they are done very frequently: September, May, September again. But this year it was done earlier than May. Shopify public offering. Let's see that they have completed the public offering in February year 21. It's a red flag for me. I don't know what's going on. I don't know why the company that is so successful does public offering constantly, because they don't generate cash. They are actually losing it, and they have a lot of hidden accounts payable off the balance sheet. And according to my expectation, the next public offering will be in June or July, and after that in August or September, and after that in November or December, and after that the company will apply for insolvency and for putting under the management, because it will not be able to pay off its debts. It's the worst scenario possible, but it is possible, because in every Ponzi scheme you have to double at least the amount of cash injected, and it's what Shopify is trying to do. They will start to public offerings. Now it was 4 months, it was 6 months, and it was 5 months. Now it will be 4 months, 2 months, 1 month, and then the company goes into nothing. I don't think what should I add about it. know how much time do I have left. I have limited version of Bandicam. I'm not a professional advisor, I'm not a professional YouTuber, so I don't know what to say to you. I just want you to be very careful with Shopify, because recently, for example, 3 directors left the company. They say that they have left for personal reasons, but nobody will tell that I have left because there was a fraud and I was participating in it. One more thing I would want to say is about the research and development. I will return to it. We see it's above 500 million in a year, and just for your comparison, annual research expenses of Princeton University is about 300 and University of Chicago 400, but those are universities. They at least produce something, they do some researches. This is IT company. It's not even IT company, it's a internet company. Internet company basically sells websites and process payments, and it's not Tesla, it's not Nvidia. I don't know of any innovative thing that they have done. They are doing designs, they are doing ads, but nothing special. They are not moving it anywhere. Так. Sorry, I'm checking the time constantly. I don't want to take your time. Well, that's all for me now. Please, I will just move slowly over my notes, so maybe you will pause and you will read something that's interesting for you, because they're just additionals, they're not the principal. And one more thing I would want to tell you, that actually Goldman Sachs put a target price on Shopify 1,600 United States dollars. There are 2 people now, okay? Let's say I will oppose them to myself. There are 2 of them, me and you, me and them. And this Goldman Sachs, they were sued in 2008 for selling mortgage bonds to their clients, while themselves they were buying credit default swaps, and they have earned $6 billion on it. Now they were selling their customers shit, but they were buying good things themselves, and it's how they earn the money. And it's me, a simple person, no name, I don't have anything, I don't have a hedge fund, my portfolio is $40,000, and I don't want anything from you guys, I just want to inform you. So it's your choice whom to believe, whom to trust. Again, your investment is your own responsibility. Have a good day. I hope everyone good luck, I hope everyone success, and I hope that this bullish run of the market will continue for the next 12 months.